Today's topic of discussion is financial regulators. And the financial regulators will discuss secondary financial regulators. In the earlier video, we have discussed primary regulators. Now we'll discuss secondary financial regulators. So in India, secondary financial regulators are IBBI, IRDAI, PFRDA, SIDBI, NHB, NABARD, and many others. But we'll discuss a few of them. To begin with, we have IRDA. So here is an image which shows you the different companies which are working under IRDA, that is Insurance Regulatory Development Authority of India. Insurance Regulatory and Development Authority of India is a statutory body formed under an Act of Parliament to have the overall supervision and development of the insurance sector. It also looks after the reinsurance companies. It is an autonomous regulatory body which protects the interest of the policyholder, oversees the growth of the insurance sector in India, and also maintains a speedy development. Insurance repositories like share depositories or mutual fund transfer agencies will hold electronic records of insurance policies issued to individuals as electronic, idiotic, or e-policies. So just like digitalization is taking place in all other fields, insurance sector has also welcomed the change and now will have e-policies. Looking forward, we have the functions of IRDAI. So we are discussing a few of them. There are many functions. So very first is issuing, renewing, modifying, withdrawing, suspending or cancelling registration. That is IRDAI can issue, renew, modify, withdraw, suspend or cancel the registrations. It has the power to levy fees and other charges, protect policyholder interest as discussed in the last slide, specifying the percentage of premium income to finance schemes for promoting and regulating professional organizations. It specifies the percentage of life and general insurance business undertaken in the rural or social sector. It also specifies the form and the manner in which books of accounts shall be maintained and statement of accounts shall be rendered by insurers and other insurer intermediaries. Promotes and regulates professional organizations as well who are connected with the insurance and reinsurance industry so that there is an efficient conduct of the insurance business there. It adjudicates disputes between insurers and intermediaries, or if there is any dispute between the two insurance intermediaries, then IRDAI can get in and solve the dispute. Next in line we have IBBI, that is Insolvency and Bankruptcy Board of India. Now it is a board which functions under the jurisdiction of Government of India. That was formed on 1st October 2016. That is almost 4 years ago. So it is the regulator for overseeing insolvency proceedings and entities like it looks after insolvency professional agencies, insolvency professionals, information utilities in India. So these are the three basic entities. It was established on 1st October and given statutory powers through the Insolvency and Bankruptcy Code, which was passed by Lok Sabha on 5th May 2016. It covers individuals, companies, limited liability partnerships and partnership firms. The new code, which was amended in the year 2016, will speed up the resolution process for stressed assets in the company. It attempts to simplify the process of insolvency and bankruptcy proceedings. It handles the cases using two tribunals like NCLT and Debt Recovery Tribunal. So whatever cases are proceeded in NCLT and Debt Recovery Tribunal are handled by IBBI as well. The aim of having IBBI in India is to have the simplification of the process, which we have turned too complex. So there is smooth and easy resolution of any of the insolvency and bankruptcy proceedings. Coming in line is SIDBI. Now this is an image which shows the SIDBI values for MSMEs. It is a scheme for special liquidity support to MSMEs through banks, NBFCs and MFIs. Micro, small and medium enterprises. NBFCs stand for non-banking financial companies and MFIs are microfinance institutions. So the main objective of SIDBI established on 2nd April 1990, is to provide liquidity support to MSMEs, especially nowadays to those MSMEs who have impacted due to COVID-19, but otherwise also it functions for all these three sectors. We'll know more about it. Small Industries Development Bank of India is the apex regulatory agency in India for microfinance institutions. It supports Government of India and its initiatives and works as a nodal agency for some of the schemes related to development of MSMEs such as Make in India and Startup India. Purpose here is to refinance facilities and short-term lending to industries and serve as the principal financial institution in the micro, small and medium enterprise sector. It also coordinates the functions of institutions engaged in activities. So if there are two institutes working for the rural upliftment, then it can help them, it can coordinate those two institutes as well. It is active in the development of MFIs through SIDBI Foundation for Microcredit and assist in extending microfinance through the Microfinance Institution Route. So there is a special route to finance microfinance institutions. It promotes and develops program focuses on, so the promotion and development program focuses on rural enterprises promotion and entrepreneurship development. It is very important that SIDBI looks after rural areas for their promotion, upliftment and employment generation. In order to increase and support money supply in the MSME sector, it operates a refinance program known as Institutional Finance Program. Under this program, it extends term loan assistance to banks, small finance banks and non-banking financial companies. Besides the refinance operations, it also lends directly to MSMEs. Here is an image showing you SIDBI Venture, Mudra, that is Pradhan Mantri Mudra Yojana, funding the unfunded. All these are covered under the initiatives of SIDBI. Benefits of financiers, where RXIL, it is for the foreign exchange, where the financiers can have the benefit of priority sector lending benefit, access to quality customers, automated workflows and business expansion. This were the few initiatives by SIDBI. Moving ahead, we have Smera Ratings Limited by SIDBI, which helps the participants of financial markets understand the risk better. Then it is ISARC, that is India SME Asset Reconstruction Company Limited. Next we have India SME Technology Services Limited, which aids the companies in the matter of technologies. Next is SIDBI Udayami Mitra, which empowers MSMEs in easy access towards loan and other banking facilities. Next in line is NABARD. NABARD is also a development bank and it is also a secondary regulator because it regulates the agricultural growth of our nation and it aids industries. So it is an basically agricultural refinance and development corporation established on 12th July 1982. And its purpose is to have agricultural development, rural development, credit planning, refinance, regulatory body, obviously for RRBs, regulatory body for cooperative banks, and it is headquartered at Mumbai. So it is an apex regulatory agency for RRBs and cooperative banks under the jurisdiction of Ministry of Finance, Government of India. The bank has been entrusted with matters concerning policy, planning and operations in the field of credit for agriculture and other economic activities in the rural areas in India. It is active in developing and implementing financial planning. The most important institution in the country which looks after the development of the cottage industry, small scale industry and other industries in the rural sector is NABARD. It reaches out to allied economies and supports and promotes integrated development. It serves as an apex financing agency for the institutions providing investment and production credit for promoting the various developmental activities in rural areas. It also helps in coordinating rural financing activities of all institutions engaged in the developmental work at the field level and maintains liaison with Government of India, state governments, RBI and other national level institutions concerned with the policy formulation. So directly or indirectly, those who all are involved in the rural development, in the development of MSME sector, all those institutions are aided by the NABARD. Whenever you work for the agricultural industry, whenever you work for the small scale industries, cottage industry, all these are small institutions, or you can say micro institutions, which are not so well developed in India. So all these rural industries, MSME sector, MSME concerning agriculture sector, all these are aided by the NABARD. It also undertakes monitoring and evaluation of projects refinanced by all those projects which are refinanced. Like for example, an industry has provided finance to a particular cottage industry. Now, if that particular industry is in need of finance and it is refinanced by NABARD, then it monitors and evaluates the projects, all the projects which are undertaken by that particular company. It refinances financial institution which finances the rural sector. It keeps a check on its client institutes as well, provides training to the institutions working in the field of rural upliftment, regulates the institutions which provide financial help to the rural economy, regulates and supervises the cooperative banks and the RRBs throughout entire India. It is very important for cooperative banks as well. Next in line we have is PFRDA, that is Pension Fund Regulatory and Development Authority. It is also a regulatory body in the pension sector. It is headquartered at New Delhi. On 23rd August 2003, Interim Pension Fund Regulatory and Development Authority was established through a resolution by the Government of India to promote, develop and regulate the pension sector in India. The contributory pension system was notified by Government of India on 22nd December 2003. Now it has been named as National Pension Scheme with effect from 1st Jan 2004. So the PFRDA Act was passed on 19th September 2013 and the same was notified on 1st February 2014. The President of India is the guardian of the PFRDA subject to his financial emergency powers as per the Articles of Indian Constitution. PFRDA now has full autonomy and functioning independently from the financial year 2014 and 15. The main aim of PFRDA is to regulate NPS subscribed by the employees of Government of India, state governments and by employees of private institutions or organizations and unorganized sectors. The PFRDA is ensuring the orderly growth and development of pension market. To have the control over pension market and have its proper functioning, we have PFRDA. Next in line is NPS. Now, after reading about PFRDA, we'll know more about NPS, as now it is termed as National Pension System as well. So it is a system which is defined contributory pensions introduced by Government of India, mandatory for all the government employees, especially central government employees from 1st January 2004. It extends to all citizens of India, including workers of the unorganized sector as well, on a voluntary basis with effect from 1st May 2009. On 29th October 2015, RBI allowed non-resident Indians to subscribe to NPS. So now the non-resident Indians can also avail the facility of NPS. NPS was subsequently extended to all citizens of the country, including self-employed professionals and others in the unorganized sector on a voluntary basis. So those who are willing to have NPS, they can have the benefits. Next in line, the secondary financial regulator is National Housing Bank. So it is a wholly owned bank of RBI. It is an industry which works for the housing finance companies headquartered at New Delhi in India. It also works under the jurisdiction of Ministry of Finance, Government of India. NHB is the apex regulatory agency for housing finance companies set up on 9 July 1988 under National Housing Bank Act 1987. The main objective to establish NHB was to have a principal agency so that there can be promotion of housing finance institutions both at local and regional levels. There is provision of financial and other support incidental to such institutions and for matters connected therewith. So what happens when you bifurcate, when you have each leading body for each particular sector, then there is proper growth and development in an economy. So to have the regulated growth of each different company or financial institution, like for insurance we have IRDAI, for agriculture we have NABARD, for MSMEs we have SIDBI. Similarly, for housing companies there is specialization given to different companies, and for it we have NHB, so that the growth is efficient and smooth. NHB registers and supervises housing finance companies, keeps surveillance through on-site and off-site mechanisms both, and it coordinates with other regulators as well. Objectives of NHB are First is to promote a sound, healthy, viable and cost-effective housing finance system to cater to all segments of the population and to integrate the housing finance system with the overall financial system so that the needs of the financial system can be met with the housing finance system, and it is available to all segments of the population irrespective of the bias. To promote a network of dedicated housing finance institutions, so there is a group of housing finance companies who are in connection with each other so that any of the dispute arising can be solved and any of the decision to be taken can be volunteered well to adequately serve the various regions and different income groups as well. To augment resources for the sector and channelize them from housing to make housing credit more affordable, because when you are working as a group you can decide the rates and you can make the housing credit more affordable, because if there is a monopoly or if each institute, each housing company is functioning on its own will, then you can't have the affordability because each and everyone will be the king on its own. To regulate the activities of housing finance companies based on regulatory and supervisory authority derived under the Act. To encourage augmentation of supply of buildable land so that there is more buildable land, there is a good quality of building materials available, and you can have the upgraded housing stock in the country. That is, whatever new upcoming infrastructure is there in the housing sector, it is of the good quality and with the modern technology based. So you have to upgrade the things. So all this is regulated by NHB. To encourage public agencies to emerge as facilitator and supplier of service land for housing. Next in line is the MCQs section. So you have to answer both these questions, quite easy questions for you. Name 4 major secondary financial regulators of India. We have discussed so many, you have to just name any 4. And the second question is, you have to name an autonomous regulatory body which protects the interest of the policyholder in India. I hope you understood these financial regulators and you'll answer the questions in the comment section. Stay tuned for more such videos.